Hi, everybody. It's Jessica Stone at Stansberry Research, along with Scott Garliss, the editor of the Stansberry Newswire. And I wanted to talk to you, Scott, about the impact of the earnings estimates and outlines that we should see in the next couple of quarters. You know, President Trump says he hopes that the bottom of the economy will be reached about June 1st. What can we sort of infer from that in terms of the economic picture, and what does that mean for longer term stock picks?
Well, so the economic picture is very important because that tells us what kind of earnings potential companies have. And the way Wall Street asset managers invest is they're always looking to invest at least 6 to 8 months out. So what is the growth picture going to look like down the road, not what the growth picture looks like right now?
And so we will see them coming out with earnings reports in a couple of weeks. Some major banks like JP Morgan Chase and Wells Fargo will report on April 14th. How do you see and what do you think is important about listening to those numbers and determining what they mean for the overall picture?
One of the things we saw during the financial crisis was when asset managers were really uncertain about what the appropriate valuation was in the market, they took it down to a 15.5 times valuation on the S&P 500 index. Now, why this is important is we're looking at a low growth environment right now because of the coronavirus's impact. Versus when we're in a high growth, you're looking at sort of an 18 to 19 times multiple. So right now, we're probably going back to that 15 times multiple situation until we figure it out. Now, if it's going to be a short-term thing, the 15 times multiple doesn't hang around really long. But that's what we saw a couple of weeks ago, right, when the market bottomed. We took it down like 15.5 times. Now, what's going to happen this earnings season is everybody's expecting that earnings are going to be pretty dismal, and that basically the color going forward isn't going to be great. What's going to be more important is, I think, is going to be next quarter and the color coming out of next quarter. Because if Trump is telling us that he's hoping the economy is going to bottom at the beginning of June, that's the end of the second quarter. So it's going to be the third quarter when, say, the recovery starts to take place. That's going to be what we're going to want to start investing for.
Yeah, and so take that a little bit farther. How do you think investors, and especially retail investors, should be looking at that, given how these asset managers are looking at it?
Sure. So again, the asset managers want to invest for 6 to 8 months from now. So they're waiting to see what kind of guidance we get out of the first quarter, say what sectors are really benefiting right now, who's getting hurt, and they probably have a shopping list of stocks that they want to own or they're ready to own, they've been nibbling on, and when they see that trend, that's the way they're going to play. They'll be like, okay, well, hey, this sector's doing well. Let's get that shopping list out and go after that. So the way that the retail investors are going to want to be looking is they're going to want to look at those trends too, and they're going to want to start to decide on what are those names 6 to 8 months from now. Again, third quarter, fourth quarter time frame that I want to be in for the return then versus the returns now. Just they're not going to be great, but the question is how much worse can they get?
Yeah, and the other question everybody wants to know is how long are these earnings going to be under the kind of pressure we're seeing now?
Well, that's the million-dollar question, right? It's going to be the duration of this crisis. Is the coronavirus going to be something that affects us well into next year? Well, it's possible, but if you listen to what the White House has to say, like Dr. Tony Fauci, he's saying, hey, things are bad, but he doesn't think they're going to be as bad as a worst-case scenario estimate. So right now, they put a worst-case scenario estimate on growth around July, August, hitting a bottom, and now they're starting to back that off. So again, if the duration isn't super long, I think companies can weather the storm. I think the government is doing lots of things, and they're telling us they'll do a lot more to help everybody weather the storm. And the key is going to be keeping people employed and keeping them spending. And that's what's really going to make the huge difference in this economy.
All right. Thanks so much for joining us, Scott Garliss there. And if you want to see more content just like this, please subscribe to our YouTube channel or follow us on Facebook, Twitter, or Instagram. Thanks for watching.